Are we at the start of a retail gold rush? Hi, everyone, and welcome to Ainslie Insights, brought to you by Ainslie Bullion, Ainslie Crypto, and the Gold and Silver Standard. Today, welcome back Branko, who's been looking at how the retail market in particular has been interacting with buying physical gold recently. Looking at Costco, for example, there's lots of interesting things in the article today. How are you going today, Branko?
Thanks, Chris. Keen to talk about today's topic.
Well, yeah, you really highlighted that idea that we had retail people coming in to big, brand name outlets to buy physical gold bullion, and that's something that we probably haven't really seen certainly on this scale before. So, let's start off by talking about why did a big outlet like Costco, which obviously is that big American brand, but we've seen Costco's in Australia for quite a while now. Why did they start selling gold, and what's the importance of this?
Yeah, so the reason I want to talk about today's topic was basically you have this big brand like Costco who's kind of starting this new trend of, they're obviously a retail outlet. They've got nothing to do with bullion, but they figured that their clients would be interested in it. So they started offering it in ounces, like 1 ounce bars and coins. And it took off with this big social media storm. And now they've, sold over 100 million just in the last quarter. And I think that it's important because it can kind of display a shift in the demand dynamics of precious metals that maybe we haven't seen before. I think that's kind of the focus of today's topic. And, I think retail demand is kind of going to be kind of like more key component for gold in the future.
And that's really interesting because um, you could argue that a lot of what we've seen over 2023 and what we've been predicting into 2024 is that a lot of the demand for gold is going to be driven by more institutional or wholesale factors. And now this is really highlighting that there is actually some retail demand out there that could be coming to be part of the story. I mean, you would argue that buying at Costco, for example, is not a great idea for anyone listening to this. Yeah,
Yeah.
obviously there's very high spreads. The fact that you can even have an item on the shelf highlights the issue with that, right? Because they'd be putting in a lot of margin on top, as opposed to buying from a bullion deal like Ainslie, where you're going to get that price very tightly priced around the spot price that moves every 2 minutes. But how does this narrative fit with the broader data that we've seen? Because I know you've talked about, you've looked into the World Gold Council data. How does all of that fit together that we're seeing this little spike up in retail interest now?
On that first point about buying at Costco, I think that actually proves that people really want it, that they're willing to actually pay a higher spread at these kind of, not really specialized outlets.
Yep.
Plenty that kind of adds to this retail demand idea. But as far as the World Gold Council data, basically, since 2020, we've seen a massive spike in total bar and coin demand, and that is what I would consider to measure retail because it's not institutions that are buying kind of smaller bars and coins.
Yes.
So we kind of had this massive jump to 2021 where we went from, about 260 to 350 and then tons. And then we've dipped a bit since then, but we're still above kind of previous levels by a fair bit. So I think people in 2020, it makes sense. Like we did see, especially firsthand at Ainslie, the kind of craze that came with the COVID time, and people are kind of sticking to that. Even though it's dropped off, there is still this very strong sentiment around retail, and this Costco has kind of brought it out. And like you made that good point about buying at these high spreads. Again, it just shows that people are actually very, very interested in it, and they're willing to go to kind of extreme lengths and pay overs. And the data kind of supports that with this increase in total bars and coins.
See, yeah, I find that interesting as well because it really highlights an education gap that still exists in the community where they don't they get a little bit of information, probably a little bit of fear as well about what's going on generally around them. Know they need to buy some gold, but don't really know how to do that. So I suppose that's something we all need to take on board as an industry of how we educate people in this space. But what do you see as overall? What do you think that growing retail strength means for gold as a whole? Do you think that um, there are other factors playing less of a role in determining the price in the future? Are we going to see, in your mind, another one of those sort of COVID style spikes where people do get a little bit panicky around debt, for example, or situations that are unfolding in the macro space? Like, how do you put all that together?
So I think that we're not going to see probably the big spike like we did during 2020 again. It's going to be more consistent. And it's going to be kind of an undertone of just consistently increasing demand as opposed to this massive, insane spike. Because a lot of those people already be in the markets, they might just add to their kind of portfolio. But in terms of longer term, I think this is obviously very bullish for gold. And we do have kind of other catalysts such as, the central banks globally buying, China buying, kind of more institutional demand. But with these shifting demand dynamics, I think we're going to see probably less of a correlation than before in terms of the gold price and how it interacts with those factors, and more of just it being tied to retail as people continue to probably get educated as well and understand more, and their interests to buy continue to rise. So yeah, long term, I think that's probably the way it's going to go.
Yeah. Okay. And I mean, we're wrapping up now. This will be our last chat with you for 2023, and then obviously we'll be back again next year to talk more about all of this. But it's been quite an interesting year. We've had a lot going on. We're going into what I'd argue is an even more interesting year in 2024. What's your sort of wrap up? If I ask you that for the year, what's your big picture prediction about where you see us heading into 2024 with gold generally?
I mean, obviously bullish. And I think as far as the narrative goes, I'm strongly following this good news is bad news narrative, and then how that's going to play out across all asset classes. I think, I'm a big crypto guy, so obviously following crypto and how that goes is going to be fascinating. I think we're getting a lot of institutional money that's flowing into like equities, and that's kind of pushing that. So I think that's going to be something interesting to follow as well. Do you have any thoughts?
I mean, I'm very heavily focused on that liquidity aspect, and I think we're going to see a lot more liquidity coming into the markets in 2024, and I think that's really going to push gold. I'll be talking about that. I'll be putting out that video on Friday, my monthly liquidity update, and certainly I can see. Yeah, I agree with you. A really bullish outlook for gold going into next year. I also keep bringing up it's a presidential election year in the US. You generally don't have the government wanting to rein in spending in a presidential election year. So, yeah, I can see that as being a real. I think we're in that tailwind situation where you've got, the worst probably behind us in terms of downward pressure on the price, and really clear skies ahead for most of next year. So, I think it's a pretty exciting time, really.
Yeah, I think we're going to see some pretty crazy volatility as we get close to the election with.
Yeah.
I don't get political, but in terms of the Trump and the situation there, I remember when he was in power, for example, he would send out a tweet and markets would just react.
Yes.
Like that. So,
and we haven't had that for a while, that sort of level of direct impact that certain people had. And we went through that with whether it was with COVID or, like I said before that presidential election cycle. It was very volatile markets on the back of uncertainty, and that's coming again as well. Yeah, absolutely.
As we get closer, and maybe Trump potentially comes in power, or even if he's just running and he sends out some crazy tweet, that's going to shock markets one way or another. So that's probably one of the most honestly important things. Like, just to be honest, I think that's like how a lot of these leaders, what they say as we get closer, especially Trump with his personal volatility, that could ridiculously impact markets.
Yeah, no, we've definitely got some volatility to look forward to. I see it as a positive, because that's where, in these markets, that's where you can make some money. But it's going to be a very interesting year ahead. So, well, thank you for everything this year, Branko. Really appreciate all of your work and insights and the work you've done specifically today. But thank you for that, and we look forward to talking to you again next year.
Thank you. See you next year.
Thanks everyone for watching, and we'll chat again soon.